Hi there, and thank you for joining us here at PhillipCapital's Market Watch. I'm Phil Gan, Senior Sales Manager at Phillip Nova. In this episode, I'll be giving an update on the FOMC minutes and its outlook on inflation and interest rates. Due to inflation, central banks around the world are in the transition stage of changing monetary policies, with the exception of the Bank of Japan, which kept a neutral stance in monetary policies. As we move into the second half of 2022, how will the policy changes affect the US market? What are the other trending opportunities with regards to the US dollar? The US CPI data showed that headline inflation surged further by 8.5% year-on-year in March 2022, a new record pace in 40 years since December 1981, while core inflation rose further to 6.5% year-on-year, setting a new high since August 1982. Inflation is expected to rise higher in the second quarter of 2022 before some easing in the second half of the year. In a widely expected move, the Fed set its target federal funds rate to a range of between 0.75% and 1% on 4th May in a unanimous decision. Fed Chair Jerome Powell said policymakers were ready to approve half percentage point rate hikes at upcoming policy meetings in June-July this year. The FOMC statement mentioned that the Fed's balance sheet soared to an estimated USD 9 trillion as the central bank attempted to shelter the economy from the pandemic. It also mentioned that the balance sheet would be allowed to decline by USD 47.5 billion per month in June, July, and August, and by USD 95 billion per month starting from September. The target for interest rate is dependent on two factors. First, whether the Fed will follow through with its plan of bringing down sky-high inflation rates of 8.5% down to an average of 2% by increasing interest rates. Secondly, it also depends on the unemployment rate. The US unemployment rate is at 3.6% for the month of April. The Fed aims to achieve a target interest rate of 2 to 3% to bring full employment back into the labor market while keeping the inflation rates down at the same time. The Fed is aiming to achieve the rate for a neutral policy setting with an interest rate that neither pushes economic activity higher or lower. The Fed has been clear with its forward guidance on 50 basis points rate hikes in June and July. It's likely the Dow Jones will take a correction. The correction scenario puts the range of Dow Jones from 29910 to 36759. It will most likely have a consolidation of the lower bound of this range from 29910 to 33033. In the likely event that the Fed announces further rate hikes after July, a deeper correction in the last quarter of the year will test support levels 26388 and 61.8% of Fibonacci retracements down to the level of 25344. The Bank of Japan, as widely expected, has decided to keep its policy measures unchanged at its monetary policy meeting. The BOJ continued its stark divergence with G7 peers, who are on the cusp already normalizing monetary policy, as the Japanese central bank kept its preference for easing bias and retaining a statement that it expects short and long-term policy interest rates to remain at their present or lower levels. Japan's March consumer prices rose by 1.2% year-on-year. There is an upgrade of its financial 2022 inflation forecast, which will rise to 1.9% before easing back to 1.1% in financial year 2023 due to the impact of a significant rise in energy prices, as the BOJ expects it to wane subsequently. Most notably, it will defend a 0.25% 10-year Japanese government yield cap for the long-term interest rate strategy of the yield curve control. BOJ, as widely expected, resolutely kept its policy measures unchanged to achieve the 2% inflation objective. Although, as with previous meetings, was not a unanimous decision. Even as Japan's inflation heads higher, the driving factor is largely stems from an uncertain supply shock, while domestic demand remains weak. This is in line with Governor Kuroda's inflation view, as he is skeptical that the imported inflation, which is surging in many parts of the world, will lead to a sustained price gain in Japan. He also shared that it will take some time to reach a sustainable inflation rate, presenting a clear indication that the BOJ is not considering any normalization policies, rate hikes, or tweaking current monetary easing anytime soon. Expectations of the Fed to further increase interest rates and Bank of Japan's continued easing of its monetary policy were likely to see the dollar-yen pair rise further in a medium-term uptrend. This can be a carry trade for the pair as you receive swaps for long positions in spot dollar-yen. Based on historical data, the first target level will be at the resistance range of 132.97 to 134.9. The next resistance range would be 144.24 to 146.32. The support level is currently at 125.10. Our Phillip MT5 is equipped with auto trading function, advanced charting, and technical indicators for trading into various asset classes like Forex and CFDs, indices, oil, and shares, which allows you to trade both directions of the market. You can trade these stock indices, CFDs, and Forex at zero commission and with no platform fee. So sign up for a free live trading account now. It takes only a few minutes using SingPass account. There's absolutely no minimum deposit required. And that's all for PhillipCapital's Market Watch. Do remember to like and follow us on social media and subscribe to us on YouTube. Also, tell us what you think. How will the US market fare in 2022? Leave your comments. Thanks for joining us, and we'll see you soon.